the Property Pod. Welcome to the Property Pod with Moneyweb. The property sector is an ever-changing sector. And in this podcast series, your host, Suren Naidu, chats to movers and shakers in the property industry.
Hi there, and welcome to the latest edition of the Property Pod, South Africa's leading property investor podcast. My name is Suren Naidu, and on this weekly Moneyweb show, we gain insider insights from leading CEOs and other movers and shakers in South Africa's expansive property industry. The rural and township retail property market continues to shine in the country, performing better than other sectors such as the office market. It has been a trend over a number of years, but it also got a boost somewhat during the COVID pandemic. And after government implemented the TERS grant to the poorest South Africans, listed retail-focused counter Vukile Property Fund is one of the main players in the rural and township retail property space and has been on the acquisition trail, scooping up some prime assets over the last few years. One of their latest acquisitions that has been finalized is the BT Ngebs City Mall in Mthatha in the Eastern Cape, acquired jointly with retail property developers and investors Flanagan and Gerard for around 800 million rand, and that I believe was from Sisa Ngubelana's Billion Group. Now, the new owners have some big plans for the centre, and to tell us more about the acquisition, the revamp plans, and why rural retail is so hot is Itumeleng Mothibeli, Vukile Property Fund's SA Managing Director. Welcome to the Property Pod, Itumeleng.
Thanks, Suren. And lovely to be on the Property Pod with you. And I guess well done to you on the success and the momentum of this platform. Looking forward to chatting to you.
Thanks for that, Itu. I know your industry peers refer to you as Itu, but I'll stick to Itumeleng maybe. Looks like you and Vukile have been quite busy with acquisitions and capital raises and all the things that get investors excited, despite the rest of the REIT sector still having some tough times post-COVID. I won't really delve into the Spain business, as Vukile has also invested in Spain, because you're the SA Managing Director, and we had Lawrence, I think, last year on the pod speaking about the group's offshore forays. But as a group, SA still seems to be important with expansion in various provinces. How does the BT Ngebs City deal fit into all this for the group?
Suren, with regards to the importance of South Africa and I guess subsequently this latest acquisition of BT Ngebs, remember from a group perspective, our strategy is effectively three-pronged, right? So we aim to be retail specialists, so we specialize. We look to have macro diversification across geographies, and hence South Africa and Spain. And then I think fundamentally we look to grow value for our stakeholders, right? So we look to add alpha. So we do this through value-add asset management. We do it through treasury management and initiatives in that space. We do it through setting up different operating platforms. But I think also, through finding viable and very strong investment opportunities, right? So, and the way that we look at that is our returns have to be higher than the cost of capital. We buy assets that are nodally dominant, that will be investment grade, that will drive long-term growth, and ultimately bring total returns to the broader portfolio. And I guess BT Ngebs allows us exactly that opportunity, right? It's a nodally dominant asset in Mthatha. It's one that we feel has been undermanaged over the years. It's one that we're buying from potentially a distressed seller. And I think with Flanagan and Gerard jointly, we'll look to really add this asset management element to it by driving, value from an asset management perspective. So, just to remind you, in 2019, you'd recall that we also from, not necessarily from the Billion Group, but from Rebosis, we bought an asset in the Eastern Cape that had, similar characteristics. And it's currently a top 10 asset within the Vukile stable. It's fully let. We've seen an increase in footfall. our through rentals have been market leading, and that's what we want to do with BT Ngebs. We really want to, buy this asset, invest in it, reposition it, and make sure that it's then positioned for further growth into the future.
Can I interject there? Is that the Mthatha mall that you're referring to?
Yeah.
So this BT Ngebs, you talked distressed assets. Was it a steal for the buyers, yourself and Flanagan and Gerard?
Yeah. Serena, I wouldn't necessarily say that we got it as a steal. I think for multiple reasons, and I think one of the biggest ones is with respect to our counterparties in the transaction. The transaction itself was an 800 million rand transaction, as you said. The way that we looked at the underwriting, we felt that we need to spend quite a bit of capital, about 20% of the acquisition price, on repositioning, redevelopment, and making sure that the asset is fit for purpose. And we published that we buying this at a 9.5% yield, inclusive of our capital spend. And Serena, we always talk about this difference between price and value. So we think that in the first year, when we look at unlocking our cash flows, this yield will increase significantly past the 9.5% mark. In fact, our internal projections are that it will be double digit in the first year. And I think, again, once we have deployed the capital, the Vukile portfolio's yield on similar assets is sitting at about 8.5. So if we would have bought it at, say, 10 plus, spend the cash, reposition it, make sure that the asset is strong, it should then re-rate from a cap rate perspective. And not only will we see an increase in cash flows on the income side, we'll also see capital growth coming through from the assets. So it's a pretty exciting, I think, initiative that we're looking at.
Well, it's interesting what you say there. I'm not going to ask you to comment on your peers, but there was a Stanlib report this week, and a couple of other CEOs commented that some of fellow peers that invest in the urban market may have paid too much for a particular mall in the Western Cape. But with regards to this acquisition, the deal was announced back in 2022, and now it's finalized. That's like 2 years later or more. Is this usually the amount of time that takes to bed on such a deal? I know Vukile was also planning to acquire a mall in Alex in Johannesburg, the Pan Africa Mall, which didn't exactly work out.
Yeah, I think, from our side, this was a particularly complex deal. We don't rush to close deals, for just the sake of closing and growing the business. We always want to make sure that we get the right underwritten property with the right due diligence process, so we get all the information and we make the call with all the data. So with regards to this particular acquisition, the asset itself, from a negotiation and I think closing perspective, happened fairly quickly with the counterparties. Our biggest challenge was around town planning. So the mall itself is in a precinct, but it's on one earth. So the earth consists of a mall, a hotel, as well as a casino. So in our acquisition, we only wanted to acquire the mall. Therefore, we needed to go through a town planning process that allowed us to subdivide the earth and acquire only the mall and not the hotel and the casino. And I guess that's what's taken us 18 months to make sure that that's closed, and working with the council. And the council and the mayor has been particularly supportive of the transaction. And it's taken us about 18 months to get that process done. So I would say this is a slightly, kind of nuanced or different and challenging asset and acquisition. And normally, you'd probably see closing a deal of a similar size asset in the South African context taking about 6 months to get to closure.
Thanks for the insight on that, Itumeleng. With BT Ngebs City being finalized, Vukile and Flanagan and Gerard are planning a major revamp, according to a statement released last week. Tell us more about this, because you didn't mention a figure, but you said 20% of your capex allocation for this deal. So your allocation based on the actual price is like 400 million rand. But how much are the joint parties expected to spend, and what will it entail?
Yeah. So, Seren, we're looking to spend, let's say about 20% of the overall purchase price. We're obviously still going through all of the detail around design, final look and costing. So that's what we've penciled in at the moment. We haven't necessarily kind of finalized that figure as co-owners. And I think what we're trying to do with the asset is we really identify this is the biggest asset in Mthatha. It has all the hallmarks to be a super regional in its context. And we just feel that a couple of key issues from a design, management, tenant mix perspective that need to be rectified. And we've done, something very similar with Flanagan and Gerard. We've worked with them on 4 other, big, substantial developments in the past. And we think that, with the partnership that we have in terms of professionals as well as retailers, we can really, improve the tenant mix and the offering that we have at Beating Ngebs. So the key issues that we're trying to address there is we really want to improve the flow. The mall itself is a race course type design, and it has one area that is, what people would term, dead, doesn't get a lot of footfall. We really want to introduce a new anchor there and to make sure that there's access from parking with introducing escalators. So it's more design issues. We then want to improve, our entrances, main entrances, so that it looks like the assets that we want it to be. We think from a category perspective, the food offering in terms of setting up a food court is something that will add value to the asset. And then we really, have spoken to a lot of national retailers that don't have presence at Beating Ngebs. There's a lot of excitement around us looking to energize our tenant mix in terms of introducing new retail entrants. And then I think there's also, Suren, what has been, quite a big strength of the Vukile asset management approach, both here and in Spain, where we look at efficiency of space usage and look at boxes and suites and whether we can downsize them, introduce additional retailers, drive value, and increase the overall through rental of our asset, which eventually increases the value of the overall asset. So we've identified, 3 or 4 significant downsize opportunities where we can introduce new entrants jointly with F&G. And I think this is something that, once we've executed on, will definitely then drive the cash flows to, a yield of around double digits. So quite exciting.
So effectively increasing the variety there and more tenants in the current space. Give us some history on the center size-wise and location. I haven't been to Mthatha for a long time. I think before this mall was even built, the last time I was there. And it has a little bit of history. I mentioned CSA's Billion Group originally involved. Just some insight into the size. You talked about a casino complex there. Does it have quite a big catchment area?
So the mall itself is 57,000 square meters in terms of GLA. So, quite significant and sizable in the context of Mthatha. So it's it's a regional mall, but we feel that with the right tenant mix and the right promotional activity, we really can drive a super regional nature of the asset in the Mthatha region. It was developed and opened in 2015 as the largest mall in Mthatha. As you said, developed by the Billion Group, a very good development. It's located in the south of Mthatha, and it caters for well over 50,000 households. And from a Vukile perspective, we really, when we look to buy assets and we look to manage assets, we look to be nodally dominant. So our asset has to be the dominant mall in the South African context. And this mall is exactly that, with 50,000 households. And I think one other thing in the Mthatha region to us that was exciting when we saw this opportunity is, similar to the mall that we own in Maluti in the Eastern Free State in Kwakwa. The economy in and around the area has 2 layers. It has a local municipality and also houses the district municipality. So it has a significant kind of fiscus spend and underpin. And we think, that's why this mall should see significant growth and, be very similar to our top performers in our portfolio. And Mthatha continues to be the economic hub of the east of the Eastern Cape. So when you look at Transkei, the old Transkei, you look at the Wild Coast, it's still the economic hub of the area. And then from a tenant perspective, the mall majority anchored by nationals. We've got Checkers and Pick n Pay. And I think the opportunity that we saw with Flanagan and Gerard was, when we walked the mall initially, we saw, quite a bit of vacancy. So we bought the mall with just under 15% vacancy, and I think that's where a lot of our asset management interventions and know-how and skill can add value to quickly let those vacancies, not necessarily just for the sake of filling them, but introducing the right tenants to ensure that the mall remains nodally dominant. So Suren, we think there's significant room for growth, not only at an asset level. I think when one looks at the town and looks at the municipality, the buy-in from the municipality for the new owners, I think there'll be significant growth in this asset looking forward.
Well, as you said, the local leadership, they are quite excited, probably because you're bringing further investment into the town. But township and rural retail has been thriving, and Vukile has been on top of this from the listed REITs perspective. There are other players, of course, but Itumeleng, I heard you speak at Exemplar Township Retail Conference, which I also was a part of last year, and you shared some great insights into this market. What's behind the boom? Because you have elements, but there's also some very interesting tenants that play in that space that you mentioned at that conference.
Yeah, we're very passionate about this space. So over the years, our Vukile portfolio, when we look at our rural township kind of commuter and value buyers, about 75% of our Vukile portfolio is in the space. And, it's effectively taking retail to where people live. This is kind of where the mass part of the SA populace lives. And to us, it's more than just retail. It's really bringing good services, convenience. It also brings a sense of pride. It's a betterment of the locations in which we have these sites. In our interactions with community leaders, it actually becomes a community project. So to me, I think that's a very important part of where we operate. And to me, when I think about what's driven the strong performance over, let's say, the past 5 or so years in the space, I definitely think that the fiscus underpin that we've spoken about earlier. Around grants is a significant contributor to the strong performance of our categories and our malls. But I also think that, the informal cash economy in and around our malls is very exciting. I always tell people, when we drive out to our mall, let's say in Dobsonville, as you enter the north of Soweto, every second or third house has a business that's running. There's a big informal economy in and around these areas, and I think that also drives, a lot of the cash that comes through the mall. I think there's also an element of, socially, just a lot of entrepreneurship and endeavor, right? So in a lot of these places, there's not a lot of commerce and industry, so people don't have a choice but to be entrepreneurial. And I think a lot of this entrepreneurship comes through, drives a bit of spend, has cash that then comes, gets banked at the mall and gets spent at the mall. So there's that benefit. And then also what's driven it, I think, from a kind of structural and design perspective is it brings convenience. So people don't have to get into a taxi and spend 25 Rand to get to kind of the next urban area. They can live and shop where they live without spending the additional sort of savings in bus fare. So I think that's also helped with the convenience element. And then lastly, I think to me, it's critical mass, right? So number of households and people per household in the areas in which we have malls, being the rural township commuter and value space, is much higher than in the urban space. So there's a much higher concentration of people that support the malls. And I think if in your approach and how you manage the mall, how the mall interacts with the broader community, you are seen to be part of the community. And Serena, I speak a lot about this idea that malls need to drop the kind of figurative fences, especially in township and rural areas, and you need to be part of the mall. A part of the communities. And I think if you're then seen to be part of those communities, a lot of that spend and loyalty, then results in, your tenants doing well. If your tenants doing well because we're getting support from the shoppers, then the rentals, increase. And the results that we've seen over the past 5 years in our portfolio is, lower vacancies. We've seen higher growth in base rentals, higher trading densities. We've seen low rent to sales ratios, higher retention ratios, as well as reversion ratios. When we compare, this portfolio with our urban portfolio. So to me, it's it's an area of retail in South Africa that's very exciting, and I think with sustainable growth, when one looks into the future.
Just to conclude, Vukile has gone big into the Spanish retail market too. But how big is the fund's SA presence now? Are you still looking for more acquisitions or developments in South Africa?
Yeah, I mean, when our total assets under management now are just under 40 billion, and about 60% of that is now in Spain. When you look at earnings, it's probably at about 50-50 because the yield on the SA portfolio is at about 8.25%, whereas the Spanish portfolio is just north of 6. So when I described our strategy initially when we started this discussion, I think we really want to be retail specialists. We want to diversify across geographies, and I think that we think that that's a sound strategy. And we're constantly looking for deals. We've got a significant pipeline now that that comes from our REIT peers, from pension funds in South Africa that we're looking at. And I guess the challenge at this point in time is having closing the gap between sellers' expectations and buyers in the South African context. So I think if we can deal that, we'll definitely be looking to buy more assets in South Africa. But the challenge at the moment is when one looks at financial viabilities and we look at our cost of capital, so we're always looking to do accretive deals. So we don't want to do deals that are dilutive. So in the South African context, our cost of capital, if you're looking at about a 30% LTV, is circa 10%. So it's very hard to buy dominant, strong malls that are that are higher or that are double digit at the moment, unless you find something like a beating Ngebs. Whereas I think in Spain at the moment is, their cost of capital with a cost of debt sitting, let's say, at about 6%, using that as an average, they can buy assets at 9%. So to me, I think it's one of those dynamics. But it's something that, from a Vukile perspective and a Vukile board perspective, we continue to look. But what we won't do is do deals for the sake of doing deals, do deals that are dilutive, do deals that don't make financial sense. And until, some of those expectations between sellers and buyers change, we'll continue looking, but we'll only push the button on things that are financially viable.
Itumeleng, it's been a pleasure. Appreciate your time on the podcast. So more acquisitions in the lineup for the company. And that was Itumeleng Mothibeli, Vukile Property Fund's South African Managing Director.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Follow Suren on Twitter @Suren Naidu for more of his property industry content and other business stories. The Property Pod.